what we're going to talk about is what I call the alternative accounting practice. And the alternative accounting practice is going to focus on three major elements: positioning, pricing, and innovation. And all practitioners do some sort of positioning. Like all of us have a position of some sort. We have some sort of pricing strategy, and we do innovate in one way, shape, or form. But what I mean by the alternative accounting practice is we narrow and focus on being uniquely different in those three areas. So I'm going to show you what I mean by uniquely different. So I'm going to start with positioning, which is going to be the topic that we're going to spend a lot of time on today. We may spend 80% of it just talking about positioning, because to me, it is the single most important strategy that any business owner or any professional should adapt. Single biggest, most important strategy that any service professional should adapt. It's particularly important for accountants, especially for me. It has been particularly important. So this is what it works, okay? A traditional accounting firm is a generalist, right? They have a wide customer base, and they really strive for growing their customer base every year and just growing more and more volume. That's what most traditional practices are. They take every customer, they take every opportunity, they serve every need. As long as it's got the word accounting or bookkeeping next to it, a traditional practice will say, yep, we'll take it. The more the merrier. We like to take new customers. And one of the nice things about the traditional practice, and this is a situation that happens with most accountants, is accountants have very little attrition rate, right? They keep the same old clients forever. That's traditional. Traditional accounting practices is how they work. They keep a client, and as long as they don't screw up majorly, they'll probably keep that customer forever. And that's typically a good thing, and I would say that's probably the best part of the traditional accounting practice. But I'll argue against that briefly. Then also, the relationship is based on consistency. Like I said, as long as there isn't a major screw up, your clients will probably stay with you because you're consistent, right? So as long as you deliver consistent, you will keep your same old clients forever. Now, the challenge is, to me, is the traditional accounting practices have to do outbound-based marketing, right? That means that they're always searching for new clients or 100% rely in word of mouth. But the problem with word of mouth is that most word of mouth is generalist. The most people that recommend you to their friend and colleague are not focused on that target customer that you're looking for. They're just saying, need an accountant, use mine, they're great. So in order to get your ideal clients, you will be doing a lot more outbound-based marketing, searching for new clients. This is the number one question I get in conferences when I talk about concepts of marketing especially. People ask me, Hector, how do you find new clients? Well, the answer is I don't. They find me, right? That's it. They find me. So there's no other answer to that, right? So what's the alternative accounting practice? So what am I advocating for? What is it that I do? What is it that I practice? What is it? How is it that I am successful? I'm telling you, what is it that I do? And I practice what I preach, right? So I'm a specialist, or I specialize. That means that I prefer to have a narrower customer base based on a wider customer base. Now, the way I grow my practice is not through more customers. I grow my practice through expanded profitability without forcing volume. That means that I look for clients that have a lot of money to pay me. But in order to do that, I have to provide a lot of value so they can give me that money that they have, right? So I focus more on smaller client base that pays me a bigger amount because I provide more value or provide more services within my deep area of specialization. Now, I am very strategic on the customers that I take. That means that I turn down many people, okay? That's just how it works, right? I can't be narrow and specialist and take every single deal that comes along. And trust me, I get a lot of deals that come along via email from my YouTube leads and that sort of thing, okay? Now, I have a dynamic portfolio. That means that I don't have a lot of customers that I used to have last year or 2 years ago or 10 years ago. And that's not a testament of quality. It's just that my practice is evolving and I'm narrowing my focus and I'm doing more things, more expensive things. And I'm focusing on fixing the big expensive problems. And a lot of my clients come in, they work with me, I fix their expensive problem, and they go with a lower cost provider for their monthly bookkeeping or whatever it happens to be, because I focus a lot in consulting and problem solving, right? So I am more focused on having a portfolio that works with the clients that fit my current practice, fit my area of specialty, and fit the amount of money that I want to charge, right? Because if usually it is the oldest clients that it makes it so much harder for you to raise your pricing. Think about it. Most of your older clients, they get grandfathered with an old rate, or they're grandfathered with old expectations of what you're supposed to do, or they're grandfathered with, what is it that they expect you to do, or how you prioritize their work. And it's very, very difficult to raise your prices with your older clients. So in order for me to continually innovate, especially with pricing, I have to have a dynamic portfolio, and I have to have sort of a fresh group of clients looking for fresh amounts of value instead of the ones that are just used to the same old thing. So I'm arguing against just, keeping your old clients forever, because that keeps your practice old and tired and innovationless. Now, the most important thing about having an alternative accounting practice and the way you position yourself is the relationship is based on results, which means that if you cannot deliver results for the client, that means you're really good at doing a tax return. You're great at it, right? You do a tax return, you do the books, but you don't transform them. You don't deliver results. It is best that you divest the customer, because then you get stuck in the rut of doing the same old thing for the same old clients, charging the same old price with the same old expectations. So it really, really stops you from growth. So I have a turnover of, I would say, about 50%. So about 50% that I talk to in the year, I talk to them once, I do a project, go back to your old accountant, go back to your old bookkeeper. I'm here to solve your big expensive problems. And typically I fix it and I go away. And when they need me again for the next expensive problem, I'm back. Okay. So that's really what it is. Okay. So the last one is, as I mentioned earlier, I do inbound based lead management. I don't look for clients, right? Clients find me and I have to just figure out how to manage all these leads and just focus on the right customer, the right opportunity. So a lot of my marketing work, it's finding the clients that fit sorting through my leads for the ones that fit versus looking for the clients that fit. Okay, we're gonna go a lot deeper into this, but this is kind of like the overarching theme. Now we're gonna talk about pricing and innovation, which are the two other pillars of the alternative accounting practice. So we're gonna brief through practice and innovation, and we're gonna go back to positioning, because I think, and I'll state it again, positioning is the single biggest, most important strategy you can have. And if you're the type of person that kind of likes to start a new year with fresh ideas and new strategy, this is it. Look no further, right? Your positioning is the single most important thing. And hopefully I'll sell you on the concept throughout the webinar. Okay, so let's talk about pricing. So a traditional accounting practice solves client problems based on clients' self-diagnosis. That means I need bookkeeping. I need you to clean my books. I need you to do my tax returns. And you clerk the transaction and say, sure, that's what I do. I'll do it. Whereas an alternative practice solves problems based on deep value conversations and does not take the client's request. It takes the client, doesn't take it at face value, right? Takes it with a grain of salt, saying, oh, you need me to clean your books? Let's deep dive about the real reasons why you need clean books. That's the value conversation. Now, we've talked about this topic before. I created some references around it. So hopefully, you've heard me talk about value conversations before, but that's not something we're going to deep dive into today. The other one is most traditional accountants, they have what I call an open scope based on effort, where whatever the client asks for, as long as I can do it and charge for my time, I'll do it. Whereas I personally, or any alternative accounting practice, only focuses on narrow scope based on desired results. So narrow scope based on a desired result. That means that I have to know what the desired result is. The traditional accounting practice has an hourly rate. The alternative practice has a price. And I highlighted yellow because the word rate should disappear from your language, because rate implies a quantity multiplier. And if the quantity multiplier is a function of time, then you're going to be a slave of time. And being a slave of time is the worst thing you can do, because time has an artificial ceiling, right? There's a maximum amount of hours of the day, maximum amount of billable hours. I don't want to get into value pricing. That may be a whole 8-hour series of webinars, but we say a price. We don't say a rate. Those yellow ones that I'm highlighting are language-based transformations. You got to strongly think about transforming your language to transform your practice. I'm going to take one step back and just show you one thing. And I'm going to say something that may be a bomb, which is stop calling your clients clients and start calling them customer. Okay. This was the single biggest thing for me. It was so hard for me to stop calling my customers clients and start calling them customers. When you can effectively make that switch in your head, you will effectively transform. You don't have clients, you have customers. And the reason for that is because with clients, long-term relationship, it's implied. We take clients for granted. We have a portfolio of clients. We have fixed income. That makes us comfortable, makes us old, and makes us tired. Customers, on the other hand, you have to win every single time. You have to wow every single time, and you have to build customer loyalty at every interaction. Start calling your customers customers, make that switch in your head, and you will transform on your approach. So the same thing happens with the word rate and price. And by the way, every time I present this and this whole language thing, rate, price, customers, clients, this is not original from me. This is stolen from Ron Baker. I learned everything I do from Ron Baker. Every time he does this, there's a big uproar and people just get so sentimental about not calling their clients clients, because the word client is supposed to imply all these great, amazing things, right? It's my client, they're mine, they're no one else, this and that. But and it's not about using the word with you. You can still call your client in front of them. That's totally okay. I'm not talking about how to use the word. I'm not saying using it in terms of how do you refer to your clients in front of them. This is how you feel about them, right? This is an internal transformation. Okay. All right. And again, we'll probably have a 50-50 split on this. And most people would say, Walmart has customers. I have clients. I get it. And I'm not trying to argue that I'm right and you're wrong. What I'm arguing is transformation starts with language. And it had to happen with me. That was one of them. Anyway. Okay. So, and you can agree with 99% what I say and maybe not take that one, but I'll stick my stake on that because I think that was an important one. Now, traditional accounting practices collect retainers and bill in arrears. Alternative accounting practices collect payments up front. Why? Because we are results driven. That also means that we're gonna, add all of our resources into this project because it behooves us to get results and it behooves us to deliver the client what they're looking. Their customers. Yeah, I still do it. The customer what they're looking for. So for that, I am very, very gung-ho about getting payment up front. Or worst case scenario, you can do 50-50, but nothing on hours, nothing on timesheets. That's all crazy stuff. Also, if there's things that happen beyond scope, traditional accountants send the customer, their client, an additional bill. Whereas if there's something beyond scope, I either turn it down or draft a change order. Say, hey, there's a change order. Give me a second. I'll write it down and say, this is what you wanted before. This is what you want now. This is the change. This is the new expectation. This is the new deadline. This is the price of the change order change. If you don't want it, it's automatically turned down. So we automatically turn down all scope creep until the change order comes along. And we do price our services in a way that 5%, 10% scope creep, we still don't worry about that. We talk about the big scope creep changes. And then traditional practices, usually every year, they go to their clients and say, hey, my hourly rate went up. And it's a painful conversation with everybody. I used to, by the way, I used to do that. I went from traditional to alternative in just the last couple of years. So when there's a rate change, because we give a fixed price, you have a periodic review, and you have that in the engagement letter in the fixed price agreement that says we reserve the right to review our contract every quarter, and we'll sit down with you and we'll discuss if there are changes on the scope. And a lot of times when there's scope creep in the middle of that quarter, I eat it, I do it just so I can measure how much more work it takes. And then during the review, I say, hey, by the way, we had this change 2 months ago. We went ahead and did it. We took care of it. You're a great customer. We love you, this and that. But if you want us to continue doing that, that change that happened 2 months ago, we're going to have to adjust our price accordingly. And that's really what I think boils down to when it comes to changes. And traditional accounting practice writes down billings, right? The client is satisfied because they didn't like the way it came out. And in order not to fight with the client, you say, fine, I'll adjust my invoice. Where we guarantee our work, we give our money back. And that's a really big deal. When people are not happy with me or us, and it happens, by the way, move that chair out of the way. When clients are not happy with us because we screwed up, we're human, we screw up just as well. I think I'm a superstar accountant, but I also screw up, I'm human. I just give them the money back. Or at least I start with giving the money back. I say, Mr. Client, hold on. Here's a check for your services. Hold it in your hand. Okay, tell me what your problems are. When you give somebody their money back and then listen to the problem, the tone on how they talk to you is night and day. Because most people are not expecting to get their money back. They complain as loud as possible to compel you to give them their money back. And it's just a shouting match. Whereas if you give the money back first and say, tell me what the issue is, then it boils down to the real problem. Where was the service break? Where was the expectation break? But remember, most people, because they don't expect to get their money back, it's a shouting match to see who's the loudest and who can win the screaming match, so to compel you to give their money back. So as a policy, we say, sorry, you're unhappy? Give me a second. Here's your money back. What's up? Right? And then win them back. That's why they're customers and not clients. You got to win them back. If you screw up, you have to win them back. Anyway, so let's move on to innovation. Don't get me riled up about pricing. Okay. So in innovation, what happens with traditional accounting, right? With traditional accounting practices, typically they look for ways to bill more, right? So innovation is how can we bill more hours or more billable hours? Because that's their business model. It's a billable hour business model. So the only way to innovate in terms of increasing revenue is how can we bill more? And that's the mindset. Where in alternative practice, I'm actually doing the opposite. I'm looking for ways that I would bill less if I was charging by the hour. That's what I'm looking for. So how can I keep this contract and look for all possible ways that I can bill less? I'm not saying charge less. I'm saying bill less from the concept of billable hours. So I look for ways that I would essentially shoot myself in the foot and bill less if I was billing by the hour, which means I'm looking to be more effective, right? And more efficient, more effective. All that stuff comes into play. Most traditional practices, because they get paid by the hour, because they get paid by effort, okay? Usually they're labor-centric work, right? So as long as the client throws work their way and you say, look, they're going to pay me for my time anyway, so I just might as well do it, they take it on. Whereas in a traditional accounting practice, I look for technology-centric work. And the classic example for this that I get is, let's say, for example, I'm very, very busy. I could probably take one client right now, one new one, or one project. And I have two clients. The one that wants to pay me $4,000 to hand key 3 years worth of data from a paper bank statement, and the one that is going to give me digital bank statements, spreadsheets, all digitized, but can only pay me $1,000. I gravitate towards the one that I can use technology to get the work out versus the one that will give me the most labor, even if I can charge more. Because for me, it's all about having capacity to solve expensive problems. Data entry is not an expensive problem. It's more of a stupid problem. That's a different issue that we have, because in today's age, why are we doing data entry in the first place? But an expensive problem is consulting. It's cash flow. That's our expensive problems. People pay top dollar for that. So I look for the clients that will be technology centric to me. And they want to integrate, and they want to use apps, and they want to use digital statements, and they don't want to use local Joe Schmo bank from down the street, because I convinced them that bank makes it very difficult for me to work with them. So if they decide that they don't want to move to Chase or Wells Fargo, BOA, one of the big banks, I say, dude, I can't help you. You got to go. You have to go to another practice. I don't deal with paperwork and receipts and old technology, right? Because I can't innovate if I'm heads down 8 hours transcribing that data. Typically, traditional practices use desktop or legacy systems, and alternatives are more looking for cloud and integrated apps. Mostly, for the most part, it's really the integration that they're looking for. A traditional accounting practice keeps clients' accounting compliant. That's their job. Whereas an alternative practice keeps the customer's business relevant. For me, it's more important to help my client price their services correctly. In other words, I prefer to help my client change how they price their services, like as consulting work, than to keep them out of trouble with the IRS. Because anyone can do the tax return. Anyone can keep the books compliant. There's 430,000 CPAs in the United States. They all can do that. But not that many consultants figure out or look for ways to help keep their customers' business relevant. Because keeping books compliant for an unprofitable business, it's a short order. Your client may go out of business and they can't pay you anymore. But keeping your business, keeping your clients profitable and sleek and technology driven and helping them streamline their services and workflows. It's why I love consulting. That's going to give you the most long-term value, and they also pay a bigger dollar for that. So I focus more on keeping my customers business relevant. The other one is uses proven methods to solve problems. Of course, accounting has been going on forever. 500 years. I forget when the beginning of time of accounting is. We use proven methods to solve problems. But an alternative practice will take a risk up front. I take risks. I go to my client and say, you know what? I'm going to take this big risk and try to get this app connected to your system to see if it'll work. And if it's messy, I'll take the loss. I'm going to take the risk and take this position on your tax return. Let me give you some strategies. And if it doesn't work, or if I have to go back to the IRS and I have to represent you, I'll take the loss. You know what I mean? So taking a risk to help your client move forward. Now, I'm not saying you should take risks in behalf of your customers, and I'm not saying you should put your client in an uncompliant and tax compliance problem. I'm saying to innovate, you have to be willing to experiment, and you have to be willing to lose. Because remember, we only really learn through losing. It's our failures that help us learn, and we can't innovate without failure. So if you're always using the proven method, using what works, not taking a risk, not experimenting, you're never going to innovate. Innovation comes from risk. Now, a traditional practice, typically, the most important thing is to protect their knowledge, protect their know-how. For me, it's about sharing the knowledge. It's like no knowledge, no know-how. It's going to stay in my head forever. No knowledge and no, that's it. So I really, really think that sharing your knowledge and sharing your know-how, making it transparent, it's more valuable than protecting it. Now, most traditional accounting practices have very internal, very specific traditional workflows, internal workflows, and they tend to stay private. Whereas for the most part, I have transparent inner workings. That means I expose how I do it to my client, even to my colleagues. I'm doing it now, right? I expose how I do it. I think there's more valuable on exposing how I do it, even at the risk of getting copied, even at the risk of being mimicked, even at the risk of inspiring your competition. There's more value to have transparent inner workings. Okay? And a traditional accounting practice follows client instructions. They do, right? This is what I need to do for me. Here you go. And it's always looking to recruit talent and trying to find ways to keep talent. Whereas an alternative accounting practice gives their client instructions. I tell my clients what to do. I don't get orders for them. They're paying me the big bucks, so I can tell them what to do. That's what they want. They want leadership. Okay, they're not looking for, some people are looking for a pair of hands. If you want to be a pair of hands, you do it. I'm not a pair of hands. Okay, I'm a leader, and I work alongside my client, and I help my client grow through advisory. And I retain talent. Right? One thing we're blessed with in my company is talented people. People want to work with companies that have this philosophy, especially younger folks. They don't want to work somewhere else, right? This is why traditional accounting practices, the big four, they always lose all their talent. They always lose all their talent because the company is not poised to keep them, to retain them, to reward them, to incentivize them to help you innovate. If you're highly, highly interested in transforming your practice, I have a program, or I built a program with my friend Kirk called AltAccountant. You go to AltAccountant.com. The program is going to be a 6-week program. It's going to be a lot of work. It's going to be small groups, 4 to 6 per group, regardless of how many sign up. We're going to break them up per group. We're going to do 6 projects, major projects. The positioning one is an example of one, like where we build we're going to give you a bunch of exercises that will help you build your position and write it down and put it together and communicate it easily. And it's going to be January 28th to March 8th. We're going to meet between 2 to 3 times per week via Zoom for 6 weeks in the middle of tax season. You will spend 3 to 4 hours a week working on these projects. And we would like for you to come out as an alt accountant and implement all the things, positioning, pricing, and innovation through these projects. So if you're interested, we have a coupon code, which is QBPH. I'm not putting it on the slides because when this goes into YouTube, the first 10 will sell out. Just use QBPH, like QB Power Hour, and the first 10 will get $1,000 off, just because we know we'll get 10 people from here for sure. So that won't be an issue. So and then it'll revert back to $3,000. It is going to be a lot of work. It's in the middle of tax season, but most people tell me, I want to transform. I don't know how to do it. The only way to do it is to do it, right? So you're gonna do the exercises. So I'll send you an email if you're interested.